Well, let's check in with what's trending in the world of stocks now. Conrad Song is the Managing Director of Maqro Capital and joins me now. Hi, Conrad.
Hi, thanks for having me.
Thanks for joining us. Look, we've seen quite a lot happen in the first few weeks of 2021 already. I guess, what is your general view on the markets at the moment?
Oh yeah, we're bullish. US and Aussie markets were down 3.3, 2.8% respectively last week. We've seen what you call the VIX or the volatility index. So that's so how large these swings are, reach 3 months highs off the back of these kind of movements. We've also had the RBA announcing they're extending its QE program by 100 billion. That's with a B. But at the moment, it's all reporting season, so the companies are coming out with their numbers. So that's going to be very interesting because it's very limited visibility because a lot of these companies haven't provided what's called guidance, and that's just because of the uncertainty of COVID. But some of the key takeaways that investors should be looking out for, and what we're telling our clients is that the ASX 300. So there's 51.3% of companies expected to grow its revenues this reporting season, but only 45.5% of companies are expected to grow its earnings. So that shows the sort of squeeze in margins that we're seeing, obviously due to COVID.
What stocks in particular are you liking for reporting season?
Yeah, there's a couple of plays that we're looking at. We like, so there's two dividend plays that we're looking at. Rio, their EPS is expected to grow by 16%, DPS by 11%. Citibank is pretty optimistic on a special dividend. So that's pretty exciting. Fortescue, FMG, so they're expected to have their DPS at 250 for FY21. So that translates to a whopping 11.2% yield, excluding franking credits, or 16.1 including franking credits. And outside of that, a couple of our sort of other picks that we're sort of looking at for clients is APE, NEC, and that's off the back of really strong sort of sales momentum. On the 27th of Jan, AP upgraded its guidance substantially, and NEC's revenue is expected to stay flat, whilst its EBITDA and EPS are expected to grow 40 and 43% respectively. So really strong numbers, but this is, investors really need to be looking out for what companies are going to report well, because this is where you see, anywhere from, 5, 10, 15, even 20% rallies on the day they report. So it's going to be exciting.
And I guess the other side of the coin there is, what stocks should investors be looking to stay away from?
We don't like anything with FX risk. So anything that has a substantial amount of revenue generated in the US. So we've seen, as you probably know, a large drop in the US dollar at the end of last year, about 8.7% from October to December. So you could probably expect an underperformance of companies this reporting season that have that exposure. So anything like Nanosonics, Polynovo, CSL, Avita Medical, especially in the healthcare sector. We also really don't like insurance right now. Obviously, with high business interruption claims, we expect there to be a lot of uncertainty when it comes to its earnings. The low interest rate environment is not good as well, because a lot of these insurance companies, what they do is they invest in fixed income. That's what they do with all this the cash they have. And obviously, with the interest rate where it is, that's going to be a very tough thing for them. So QBE, IAG, stay away.
What about silver? Because we've heard a lot about this, obviously, surging. You're laughing a little bit at me there, but what's happening there? Because obviously we saw that reaching highs on Monday. That was then reversed a little bit on Tuesday. What are your thoughts overall?
It's an interesting one. We were in silver a while back for a normal fundamental thematic. They've got a lot of their stuff, I guess, used for the renewable sector as well. It's a very practical commodity. That being said, all of this distraction that you guys are sort of hearing about in the media with, GameStop and silver and all this shorting, I think for investors, one, if you're not exposed to the US markets, don't worry. If you're not trading on Robinhood, don't worry. Focus on what's really important. And what's important right now is the fundamental aspects of the companies that are reporting the numbers and how they've been affected by COVID. But silver, like I said, we liked before. We still like it. We were in an ETF for silver for our clients, made a nice profit. We got out recently. But obviously that last little push that we had from, I guess, speculation, if you would want to call it that, has helped. But as a fundamental thematic, we're still fairly bullish on silver.
And what about in regards to the buy now, pay later sector? Because obviously this was something, again, that was surging, particularly towards that last quarter of 2020. Is that over for 2021?
I mean, buy now, pay later. I mean, so there's a lot of, so you've got consumer behavior, which is going to normalize. And so, COVID has been one of these thematics that we've been playing a lot on. But at the same time, I think investors should be aware that people are going back home, or behavior is starting to, going back to work and working from the office. They are going to shops again. Obviously, if we start to see any increase in numbers in COVID, that's going to affect that. But companies like Afterpay or Buy Now Pay Later, that obviously had this sort of direct correlation with what's going on the COVID thematic. You just want to be careful. It's like focus on the business. Fintech is hot, right? I mean, we're a fintech, and we're also looking at listing a company right now through a pre-IPO phase that we're getting our clients involved in. But fintech is hot. IPOs are hot. And so if you like that space, I think it's, there's a lot of names out there that haven't had massive runs like Afterpay and aren't so overheated. Yeah.
Well, Conrad, wealth of knowledge on the topic. Thanks for joining us here on Ticker.
Thanks for having me.
Conrad Song there.